guys, I'm going to jump into the market update because I know you want to know what's going on with that. So every time we get together, we do an update in terms of the numbers, looking at what has happened in the market and how each of the major markets throughout Texas have performed. We always start with a roll up, so we'll share with you all of the Texas data. So gosh, I feel like last month we snuck by the hair on our chins when it comes to sales price. So last month we beat our year over year, our February 2022 sales price, but we only beat it by 0.8% for the average, up 392,000. And we only beat it by 0.6% for the medium, up 327,000. But we still, even in this market where we've more than doubled interest rates, even in this market where your principal interest payment has gone up in some cases more than 40%, this market is still holding strong, partially because our inventory is only a 2.6 month supply of inventory. So with the historical average being our inventory at about a 6 month supply of inventory, we're still running at less than half of what our average should be. So what that means when I talk about months of inventory is if we stopped listing houses today, based on the buyer demand that we've had over the last year, it would take us 2.6 months to be completely out of an inventory of homes for sale. What the economists call market equilibrium is probably closer to that, or our 6 month supply of inventory has been about our 40-year average, but it's probably somewhere in that 4 to 6 month range. So that's one of the things that have allowed our prices not to drop through the floor, in spite of the fact that the monthly mortgage payments have increased in some cases by up to 40%. Now, last month we did have a reduction in sales. Our sales were down 15% year over year, but I will tell you, I'm really excited about this number. Why do you think I would be super excited and stoked about the number of sales being down 15% year over year? Because last month sales were down about 25% year over year. So what does that tell you? Buyers are maybe a little less interest rate sensitive. Buyers are jumping back into the market. We're getting into that selling season, right? That February, March, April, May, etc. So I'm actually really excited about this. Some markets did better in Texas. Some markets did worse, but Texas overall was only down 15%. So also want to go through the Houston market. So Houston market was one of two markets where we saw the prices down year over year. So the average price in Houston was down 2.4% to $385,000. Closed sales in Houston down 23%. Pending sales, I like to think of this as the closest leading indicator to what closed sales will be next month. So as we round out March, right? If the pending number holds, then next month, instead of being down 23%, we'll be down closer to 11%, which again is something to celebrate. And once you get down to that 11%, you get to be a little bit more on pace to where we were last year. I don't think we're going to be on pace for 2022 for maybe another full year, but we're getting closer to that. So what my gut tells me is that average price will probably be flat year over year when we look at those, when those pending sales become closed sales as we get into March. Where's everyone going? So we talked earlier about all of these all of these would-be sellers who have said, I think I'm going to hold off on the selling thing because I kind of like my interest rate, so I want to wait till interest rates go down. I still want to maybe move into a new whatever it may be, or I still have this property. So lease listings, so all the buyers have jumped over and started to sign leases. Lease listings are up 12% year over year. The lease price is up 11% year over year. So we're creating a new bubble, and that is in the lease space, right? And then the number of new properties that were put on the market for lease is up over 900 units, so up 31% year over year. So you can tell this is not only where the would-be buyers are going, who are now becoming tenants, This is also where the would-be sellers are going, now becoming landlords. So we had this concept in 2008, 9, and 10, this concept of the accidental landlord. So that meant the landlord who was not able to, or the owner who was not able to sell their property. Guess what we're seeing again in this market right now, where we're seeing sales down in the 20% range? We're seeing that accidental landlord, right? Who says, well, I can't sell it right now because sales are down in the 20% range. So if you can't beat them, just join them. So I'm just going to go and hold on to it as a rental property. If you look at the Dallas market had the most encouraging numbers of all of the markets in Texas last month, in that their year-over-year sales was up. It was up 1% year over year. Their average price was up 4% to $473,000. Pending sales, again, the closest leading indicator to what closed sales will be as we finish out the month of March, up 5%, so really strong numbers for the Dallas-Fort Worth market. Leases are also up, so we saw a 19% increase in lease, and we saw a 5% increase in that rental rate. But if you look at that $2,500 or so month in rental rate versus that $389,000 median price, yes, you're not hitting the 1% rule in Dallas or most of the other markets, right, that are here in Texas. But as a consolation prize, you've doubled your net worth. So congratulations. San Antonio saw average price increase 2%, up $366,000. Sales year over year were down $17,000. Pending sales in San Antonio have been hit a little harder, so they are down 25%. So I'm going to be super curious about how San Antonio makes out when it comes to the final numbers in March. Leases up 15% year over year, and lease price up 3%. So, but still at only $1,800 a month. Now for the Austin market saw the biggest decrease in sales. So the average price was down 11% year over year. Closed sales down 17%. Pending sales down about 500 units. What's fascinating about Austin is last year it was not unusual for you to see a list price to close price ratio that was above 100%. What does that mean? Multiple offers above list price. Okay. Now in Austin, you're seeing a list price to close price at 91%. So that market's kind of starting to come back down to earth. And you could see last year this time on, if you look at months of inventory, kind of in the middle, we had less than a 2-week supply of months of inventory in the Austin market versus today we have tons of inventory at 2.6 months of inventory. So that's one of the things that inventories has gone up over 250% in Austin. If you look at where the inventory was the same time last year, just about 1,240 units versus where it is today, around 7,100 units. But I think as people start to get used to the interest rates, we're starting to see those buyers start to come back into the market.